For me, this is exactly the sort of setup that I'm looking for to take a trade. I'm looking for, firstly, ideally aqua candles. I will sometimes use purple candles, but I prefer the aqua candles. And then we get the formation of a down blue candle. Excellent. That's the second thing that I like to look at, is the formation of a dark blue candle after the aqua candle. And then I simply take a line and I mark the top of the body of the blue candle, and that's my entry, and my stop goes about 5 pips above the top that you can see marked by the blue arrow. Now if you take a trade like this, you've got a stop of about 5 points up to there, and if we come down to where your ideal entry point would be, is about a 14 pip stop. Now potentially this move could be many hundreds of points, so I'm quite prepared to take the risk. But let's show you, starting from a blank chart, exactly how I found this level. So the first place that I like to begin is on the 4-hour chart. And why has this move to the downside caught my attention? Well, if we look back in the past and we simply copy this move to the downside, this is just to give us an indication of what is typically a push to the downside, and we just copy it and we just place it here. What we can see is that move to the downside ties up with this first move to the downside on this last decline almost perfectly. So this has got me interested that the possibility is this trend is in the initial stage of a down move. So using previous history as our guide, what can we actually learn from this market? Well, what I'm going to do is go into this top and the secondary push up, and we're going to really analyze this in detail to see how this move here might relate to the move that we're currently in. So with the benefit of actually seeing how far this market got, how could we have found this top level here? Well, let's have a quick look in at this chart and actually see what's going on. We've got this little area here where the market formed a little block where this market pushed down, then it pushed up. So straight away my eye is drawn to that, and I will just simply go from the low here to the top here, and you can see that this is very, very close to actually where this market came back to. And why is that an interesting area for me? Well, just as this area also is an interesting area, what we've actually got going on is we've got a push to the downside, and then we've got a little sideways area where the market was deciding what it was going to do, and then we got a continuation push to the downside. So this for me is a little block of orders, and if we go into here very closely, maybe on the 1 hour chart, we see this structure. Let's have a look at the 1 hour chart and see what's going on. And you can see we can't even see it on the 1 hour chart, but you've got the push down, you've got this little doji. So let's have a look at the 30-minute chart. Perfect. So we can see as this market came down, it went sideways, it tried to push up, and then it failed. So this level here that I can actually mark is my ideal level. We've got the push down, we've got the sideways block, and then we've got the continuation push to the downside. So what does that white candle represent? That represented buyers that were trying to buy this market back up, and they're obviously not market makers or banks because they haven't got enough money to push it up. Hence, this is where there are retail traders who are getting out of their positions as soon as the market retouches that level. And if we go across here, we can actually see it was a pretty good tag into that area. So let's have a look now to the right hand side of our chart and see what we can see regarding a down push move. So interestingly enough, what we've got is we've got a very similar structure. It's not identical, and very often you get similar structures in the market, but they're not identical. And this is where a little bit of practice and experience will help you massively. I can see this straight away, but I'm going to show it to you so that you can see it as well. We've got this push down, we've got this little sideways block, and that's the retail traders who are trying to buy this market back up, and they're failing. So where were they knocked out of the game? Well, all we have to do is draw a line across from here to here, and that is the ideal level that I would look at to take a low risk trade. And you could also put your line down to there as well. So in this zone, this is the area I'm looking for a potential sell, because of course the market's pushed down, it's retraced back up again. And so where's my target going to be? Well, I'm a great fan of measured moves, so I just copy that move like that, and then I would project that down like this. And so that would be my target. And of course, then what I would do is I would look left and I would see, do I have any obvious targets where there might be liquidity? And I can see straight away that there would be liquidity down here, because this market went sideways and then they cleared out liquidity with a little spark to the downside and they pushed up hard. So that's a good level for me. So the next level to the downside that I would be looking at is this little area here. We've got liquidity, they spiked it to the downside, shot to the upside. So there you go. Those are my two levels based on price. This is just based on a projection. So where would I take a profit? I'd probably take the profit at this level here, because that's actually based on price and not some fantasy that I've made up about projecting price, which can work, but it's not the reason that price is turning. So that's my trade, and we possibly won't see the move to the downside until the American session. What I've done here is I've put the histogram on the 15-minute chart. Now, from the analysis, you know that this might be a level on the hour chart, or at least the 4-hour chart. We know that potentially we have a good move to the downside, possibly. So at this stage, what we can do is we can go down to a lower time frame and we can ask the question, do we have liquidity in this level? And the histogram actually tells us that we have quite a high level of liquidity. Next question is, was this level of liquidity associated with a turn in the past? And the answer is yes. When it came to this sort of level of liquidity, we got a turn in the past, and that was only 180 points, but still it was a turn. Now, lower levels of liquidity can produce turns. As you can see, this was a lower level of liquidity. And do we have any other nice turns? Yes, we've got another one just there. So let's mark that. And that was also an area of liquidity. Now, the question is this liquidity high enough to generate a turn? And we can see that turns in the past have been generated with lower levels of liquidity. So yes, this is a good area to expect a turn. And I'm just going to put the histogram map indicator on, and you can see actually why the analysis at the beginning of this video was made in this way. Looking back historically, we can see that aqua and blue candles here and aqua and blue candles here have been associated with turns, just as blue and aqua candles at lows are associated with turns. Now, the purple candles do give turns, but it's usually aqua and blue I'm looking for. So we can see where we are now is exactly why I decided that this was possibly a good level to take a trade. We've got an aqua candle and we've got a blue candle. And as I said at the beginning of this video, I place my entry on the top of the blue candle, which is just here. Now, I don't know if this move is going to work. It might not. But at least I can get into a trade with a very, very low stop and a potentially massive reward. And that's the key to trading. In the next video, we're going to talk about risk control and why it's so important in your trading. But for now, we just have to watch this trade and see how it gets on. I thought it would be quite interesting if I actually show you how this trade actually developed. So the entry was just up there And of course, by now you would have already put your stop to break even, and you'd be sitting in about 130, 120, 130 points worth of profit. Now, I expect this market to go much further down, but if you said, well, I'm quite happy with a profit of 134 points, you could have actually got out there and you would have made about a 10 to 1 on your trade. Now, I'm going for about a 64 to 1 risk to reward, quite simply because I put a lot of time and work into this, and I actually think that we are at a possible daily, if not weekly top. So that's the reason I'm prepared to hold my trade. But if you were just scalping, you could have actually got out of this trade for about 134 points, and you would have aimed for that previous swing just down there. So that would have been a great target. Well, this is how I trade, and if you want to see more of these how I trade videos, then please like and subscribe, because that really helps the channel. And if you want, we've got a Discord channel which you can join. It's free to join, and you're most welcome to come along. All right, thanks very much for watching, and see you soon.